Aren't you tired of watching people analyze moves after they happen? Anybody can tell you how to read a chart where you should have taken trades after the move already happens. Unfortunately, that's not how trading works. You have to learn how to make decisions with the present information that you are given. And during this video, we are going to go over some tips that I have learned in my 7 years of trading that help me do that. It's going to go over expected value, back testing, journaling, reading trend, reacting to large losses or large changes in your P&L, more information like that. Hopefully you guys find it entertaining and useful. Hit the like button if you're excited. Hit the red subscribe button if you're new, and let's get into the action. I'm just high while they hating on me. People tend to think of the drinks on me. See, watch. If this breaks the red line, it's a buy candle for the strategy, but I'm not longing this market. I'm not longing this market. I refuse. I will not long this market. I won't do it. Like this is a long candle. This is a long. But I'm not, why would I be taking longs here? I don't care. I mean, maybe it does bounce and rip here and everyone's going to go, Trey, you're so dumb. No, I'm not. You gotta worry about expected value when you enter trades. You can't worry about what happens after the trade, right? You can't worry about the results of the trade. You got to worry about the expected value when you enter the trade. The expected value of taking longs in this market is dog shit. It's dog shit. So I'm not doing it. Like, I don't care if it bounces, right? True. True, honestly, Jonathan. It's a combination of discipline and trauma. That's true, yeah. I tried to take longs in this market before and it didn't work. It's learning. It's trauma. Learning from past trauma is an important market lesson. There was a question on Twitter. Someone asked a question on Twitter a couple months ago at this point, I don't remember, but it said, like, do you really believe that you need to have that, like, capitulation loss before you learn risk management? And my answer was yes. I kind of think you do. I mean, everybody's different, but most people, like, they'll be taught risk management. They'll be taught to sell where they're supposed to sell. They'll be taught R&R, win percentage. They get taught all this. It's all taught to them, but they never really, like, do it until they do hold a stock and it runs against them and crushes them, right? Then it clicks and they're like, oh, fuck, I don't want that to happen again, so now I'm going to stop doing that. Like, knowing about it and going through it are totally different, right? Because you'll think you know better. That's the thing. Because, well, the thing about it is, like, especially if it doesn't happen right away. If it works a couple times, where, like, a beginner trader holds a stock past the stop loss and it ends up coming back in their direction, they'll go, oh, I'm so smart. I'm so good. I'm such a good trader. I know what I'm doing. So then they build that bad habit. Now they're holding through stop losses. And then, eventually doing that, you get crushed. And then they go, that's why I'm told not to do that. All right. I'm going to stop doing that now, right? That's why I said it's about expected value. On exits, it's the same thing. Yes, sometimes you're going to exit and it's going to bounce right back, but you can't worry about results. You got to worry about expected value. Expected value is you should get the hell out where your strategy tells you to get the hell out to save you money over time. I like the way Mikey thinks about it. Mikey thinks about it in the terms of, like, where should you have gotten out? Okay, you should have gotten out at a $100 loss. And instead, you didn't, and you took a $150 loss. Now, think about that in percentages. You ate a 50% larger loss than you should have. That's a much more, like, threatening way to think about it, right? Think about, like, the extra percentage that you lost in that trade. It's like, oh shit. It's like, wow, I really did. Like, I keep getting concussions from the market and keep forgetting the lessons. Oh. Journal it. Journal your mistakes. Write down in a journal, hey, I effed up. I held this trade past where I was supposed to. I lost an extra 50% in this trade. You start to see that written down in front of you in a journal. Your mind is very good. Your mind is very emotional, and it's very good at blocking out things it doesn't want to remember. But if you see it in front of you on a journal, then you'll start to go, okay, look, I'm effing myself here by not getting out where I'm supposed to get out. Like over time, I can see that I'm effing myself. That'll really help it click home too, and help not just teach you that you should stop out, but to actually get you stopping out where you're supposed to. Because yeah, minds are very emotional. That's why we journal. Because your mind only likes to remember good big trades, and like then you think you're a genius, and like I don't know. Quit talking about my trade this week. Sorry. And it's way harder to make back losses. Yeah. Yep. If you lose an extra 50%, so you lost 150 instead of 100, guess what? You have to make 100% to make back that 50% that you lost. You have to make an extra $50 on a trade to make back the 50 that you lost, like over time. I don't know if that math made any sense. I might have done that math wrong, but you know what I mean. You guys have all seen the chart. Like, if you lose 50% of your accounts, you have to gain 100% of your account to make it back. You've all seen that. Wait, I'm not a genius. Good to know. You might be. Some people can probably learn, to exit their risk or to exit their trades right away all the time without having to go through trauma. But some people are just different, bro. Some people are built different. The lower low was a good short now? Not for me. I would not. What do you mean, shorting it here? Like when it broke this low? Careful chasing moves. Shorting up here, really at any point, shorting this pop was like if you thought the markets were going to come down, if you wanted to short the markets, that was kind of the move. I don't know. I mean, maybe you can build a strategy around shorting breakdowns. I've always found breakout trading to be very difficult. Very difficult. Because you are always chasing moves, right? And when you're chasing moves, like, it's more likely than not it's going to go in the other direction because stocks move in waves, right? Like, taking advantage of that wave, shorting the highs, buying the lows is easier than the breakouts. Like, and once again, like part of the whole conversation is you cannot look at this. I mean, this literally is what I've just been ranting about. You can't look at this and go, "Oh, that was a good short." Like, was it? You have to think about it. The expected value of shorting this, was this a good short? You can't look at this and go, "Oh, that was a good short." Like it's about expected value on entrances, not result and outcome of what happened, right? That's easy. Anybody can do that. Anybody can go and like post-analyze moves like, "Oh, look, you could have shorted here because like," but that's unfortunately not trading. Unfortunately, we don't have time machines. That would be nice. Dumb newbie question: how do you properly calculate expected value? Back testing and journaling. Expected value is calculated through statistics and trade histories. Backtest to prove that a strategy has an edge, or at the very least had an edge in the past. You're never going to be able to backtest and then perfectly emulate that moving forward, because when you backtest, you get to perfectly code it based off of what happened in the past, which doesn't need to happen in the future, right? But it gives you an idea of something that's an edge that had positive expected value at least. Knowing something had positive expected value is better than just fucking winging it. And then journaling, so journaling your trades, that's how you start to showcase like future results of the back test. And that's how you can really, once you trade the back test enough, then you start to get some real data, real statistics, real expected value on the trades. That's how you calculate expected value. Statistics, numbers, graphs, journals, backtest. All the boring shit nobody wants to talk about and wants to learn. Everybody wants to just be told this. Everybody wants to watch the video that, oh man, you're short here and you cover here. Like, but that's not trading. I hate to tell you, it's not trading. Because we don't have time machines, once again. I gotta start keeping an eye on the XLS on my entry exits. I know for a fact I've exited 1K plays at $200-$300. Yeah. Yeah, that's something else you can journal. It's like, okay, what did the stock do after I exited? And if you start to, you can't worry about that. But like if you start to notice a pattern that like after you exit, 75% of the time, it goes up another percent or two, then like maybe then you can start tweaking the strategy, right? Yeah. You gotta take this taking macro trend into account is making me money. Adding, what is it doing, chat? What have we been talking about? It's adding expected value. What did I do? What did I do, chat? I journaled one, I back tested, found a strategy. Cool, this strategy works really well over the past year. Let's go trade it now. I traded it. Let's look at our journal. What happens? It worked. And then it didn't. Guess what? It stopped working. I learned in my journal, oh shit, it stopped working. I haven't put the last few days in, by the way. But oh shit, it stopped working. Now maybe I need to tweak something, adding that little human element of not taking trades, of basing it off of macro trend, because I noticed that's where I was losing money, right? If I tried to short into uptrends or tried to long into harsh downtrends, that's where I was losing money. So now I've added that to my repertoire because my journal tells me to, right? The strategy is still very young. Right? The strategy is still very young. You test it, you trade it, you journal it. When you see things that aren't working in the journal, you update. You save yourself money. You don't. Now I'm not taking a trade like this. Right now I didn't take this trade. Didn't lose a bunch of money. So we're going to end our week up $218.88. Not going to complain about that. Ain't too shabby. Ain't too shabby at all for only 3 days of trading lower share size, right? We've sized back down to 50 shares because of what I showed earlier. We kind of got wrecked. The strategy got wrecked, so we had to size back down. So making that money on half share size of what we were trading before is pretty good. In 3 days, it's pretty good. Even as a main bear, I don't feel right about today either. Yeah. Well, it also never met a short setup for me. I didn't ignore a short today. This didn't get over the green line. And then when it did get over the green line, so the highest point of, holy shit. Oh, I'd be getting stopped out here. I would have just sold. So I would have lost from 367.49 to 364.81. It's a big loss. Journal, chat. Journal. You learn things about your strategy, like not taking this trade. But anyway, as I was saying, yeah, it's not like I ignored any shorts today. Like, I agree that, like, shorting the market today, of course, now that it's dumping, but, like, shorting into this trend is what you want to do. It's what I want to do. It's why I didn't buy, right? But it just never met a short. By the time it got over the green line, it stopped printing below the 15 EMA, which is something it has to do to meet my strategy, right? Journal. Does this suck, chat? Does this suck? Yeah, it sucks. But now I learned, right? You learn from, don't let it suck and then not learn anything, right? Now we've improved the strategy. We're trading better now, and you'll suck until you learn, and that's trading. Right. That kind of bakes into the learn from trauma conversation that we've been having all morning, yeah. You will suck until you learn. And you learn from sucking, unfortunately. That's like the cliche saying, when you lose, you learn. But, I mean, it's true. Don't lose money and not learn anything from it. Then you've really lost, right? If you lose, well, okay. Don't worry about one trade or one day, but like if you like go through something like this, like what I went through, don't not learn something from it. Like then you've really just lost money for no reason. Like at least learn something from it. Become a better trader from it, right? Right now, that's just human nature. We're back to green, chat. The algorithmic trading, or the trading since we started using this strategy, is back to green. Thank you for the follow, Nuki. Woo! From up 1900 to down 356 to back green. Yay! The strategy is back green. Woo! Oh man, these days were so good, man. Just felt like I knew everything. Oh, it's working, it's working, it's working. Oh shit, market conditions changed? But that's where I learned to take market conditions into effect, right? Think about the market conditions before you just blindly follow. I was making money here because the market condition was just down. So like just shorting the pops just worked. Then the market conditions shifted. I was still trying to short and I got crushed. Once again, it's why I didn't take this long in this market condition.